Fears are growing that the U.S. economy could be headed for a recession. That's after Wall Street went into a free fall on Wednesday. Two of the major indices had their worst day since 2020. The Dow closed down more than 1,100 points. And the reason may be disappointing earnings reports from big-name retailers like Target and Walmart. Let's bring in CNBC senior markets correspondent Dom Chu now. Dom, I want to start with the markets as we typically do here. How are the markets looking today?
So, it's down again right now. I don't want to be the bearer of bad news, but at least for a key part of the market, the losses appear to be stabilizing for the moment. That key part, by the way, is technology and that sector overall. The NASDAQ composite has been moving between gains and losses today, a day after it was at or near the center of what was one of the worst stock market sell-offs in recent memory. Now, you mentioned that 1,164-point drop in the Dow yesterday. On a percentage basis, roughly 3.6%, right? The S&P 500, which is a broader measure of the U.S. stock market, was actually down around 4%, and that tech-heavier NASDAQ was off around 4.75%. Today, though, as you're seeing right now, it is the Dow that is underperforming, down roughly almost 400 points. That's about 1.25% or so. There are almost just as many conflicting narratives as there are things in the stock market right now that are moving. What the market is dealing with right now is it's grappling with inflation, what that means for the economy. Now, remember, usually when inflation is the problem, you see U.S. government bonds sell off and interest rates start to rise. You are not seeing that right now, Aaron. Treasury bonds are actually going up in value, moving interest rates lower because investors are trying to seek the safety of that U.S. government debt backed by the full faith and credit of the U.S. government on fears that the economy could possibly slip into a recession.
All right, so I get it. I understand how the markets are moving now, but help folks understand. Obviously, we got these earnings reports yesterday, and that kind of, it seems, shook the market. But help us understand why these sorts of earnings reports are so critical. What insight do they give us?
So, Aaron, what they do is they indicate that some of the big moves higher in inflation may actually now be taking a real toll on corporate profits. That was a big key takeaway from the key reports that you mentioned from the likes of Walmart and Target. Those two retail giants continue to see people spending in their stores, but warned that their future results could be impacted because of things like higher fuel costs, transportation costs, labor costs. Now, if companies make less money, make less profits, investors are not as keen to own those stocks, and that's one of those big reasons for a lot of the selling pressure. We are seeing more and more companies warn that profits in the future could take a hit. And by the way, you and I talked just yesterday, and Morgan and I, about some of the CEOs that are growing increasingly worried that the economy could slip into recession. All of that is playing out in that sentiment among CEOs as well.
All right, some stuff still to watch here. Dom Chu for us at CNBC. Thank you, Dom.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.